In this video, I will show you how to find trends, how to trade trends, how to find the best entries, and how to do proper technical analysis step by step. And we will go through a lot of charts together step by step, but first of all, I want to show you the theory and what we are looking for in a market and why it's so important that we know how to read trends and what are the different trend stages. So when a trend moves, usually what we are doing is we are distinguishing between impulsive and corrective trend waves. Impulsive trend waves are the trend waves that go into the trend direction, and corrective trend waves are the ones that go against the ongoing trend direction. And it's very important that we are aware of this distinction because there's a huge difference in how those trend waves move. So for example, when we take a look here at the left, we are in the downtrend and the market is going down, right? And the impulsive trend waves are the ones that go with the trend, so they are going down. And when we compare the corrective and the impulsive trend waves, so for example here, we have a impulsive trend wave followed by a corrective trending phase. You can see that in a short matter of time, the price fell quite a bit. You can see the market really moved a lot, whereas here then the market didn't do much and the market just went sideways. And this is a very, very common behavior. Here we have an impulsive trend wave with the trend. Previously here, before there was the impulsive trend wave, we had a corrective trend wave where the price just moved sideways for a long time. So you can already see there's a huge difference, and we need to know how to trade the impulsive waves, because when we know how to trade impulsive trend waves, we can catch good trending moves. And in a short period of time, the market may move quite a lot in our favor. And this is exactly what we want to look for and what we want to learn. We want to learn how to capture those big trending moves. Now the market moved into an uptrend. And I will show you how to distinguish between downtrends and uptrends and how to find the reversal as well. And then follow it, here was a corrective wave. The market in a long period didn't do anything. And here again, long corrective wave, short explosive move to the upside, long corrective wave, and then explosive move to the upside. So it really pays off to know how to read trending phases. For example, I will show you how we can use an EMA to help us distinguish between, are we in a downtrend, are we in an uptrend? When the market is below the moving average, such as here on the left, we are looking for impulsive trend waves to the downside. When the market is above the moving average, like here, we only want to look for impulsive waves upwards, so only buying opportunities into the longer term trend direction. And there are a few techniques and tricks, and I will show you exactly how to do that now. All right, so let's start with a more of an ugly chart, if you will. And it's important that we know how to apply all the concepts and all the tools and techniques across the different time frames, across the different markets. So we are here on the 1 hour time frame, and I added a higher time frame moving average. So we are using the EMA 50 period from the 4 hour, and this is the blue line here. And what you can see right now, the market is in an overall sideways phase. So the market is trading up and down through the moving average. This is a sideways phase. There's no momentum, no direction, and generally I would not recommend trading a range. And as I've said in the beginning, we want to look for trends. And obviously every range at one point is going to end, and we need to be ready for that. So what I'm looking for here is how can we put some tools and some sense to this chart. And the first thing that I notice is that there's probably here some trend line. We can probably connect the lows here to find a trend line and just make a little bit more sense of the price action charts. Here we have then something like a triangle. We can connect the highs, we can connect the lows. All right, that is great. The market already broke out of it. We also have here the previous low around here that the market was retesting at the moving average, broke out of it. And what do you want to do now is you probably want to wait for the market to do some type of retest into a new trend. Obviously at this point it could still be the case that the market is just still trading into this range, and we want to make sure that we are clearing the range, but we want to see some signs of momentum. So actually let's fast forward a little bit and let's see what has happened. And you can see when we zoom in, the market is retesting the previous low. This is an important tool and an important characteristic of a market. So here we have previous support where the market has bounced from, and it seems to be turning into resistance now. And resistance is where the market moves from the downside into such a level and retests it. So this is a classic and very important finding that we need to be aware of, because it could be the sign that the market is now starting such a pattern here. And this could be now our first impulsive wave. This could be our first corrective wave. And we could be now at the origin of a new trending market. So let's follow the price action and let's actually see. All right, so let's clear this up and then we will observe what happened afterwards. And we want to see, can the market start a trend and how do we use that then for our purposes? So what I like to do is mark just the endpoint. So we have here our impulsive wave ended here. It could be that this could be a new swing point, new support level. And what we could be doing then is on the way down, we use that to time our trades into the trend direction to look for trending continuation plays. So let's get rid of this and let's just speed up and see, okay, this is a very strong move right into the previous lows. And let's see, the market broke out of it. So very nice confirmation. By the way, just an interesting confluence. Where is the candle finding support? At the previous support level. So you can see this seems to be, if we extend it a little bit left, this seems to be a very important level here in this overall range that I've referred to in the past. So at this point, we really don't fully know if this is actually going to start a new trend, but it looks quite promising because we have a huge momentum push and a huge move to the downside. And it could be that the market is now favoring the short side, because when we compare the trending phases, you can see here, this trending phase was very strong and this obviously also. So it seems like the downward moving trend waves seem to be quite strong now. And now what we want to do is we want to see, can the market retest the previous support and can it turn into resistance? Because then it could be really that we are looking at the origin of a new trend. So actually, let's see what happened. The market is first pulling through a little bit of a deceleration candle, so a pin bar. And then you can see the market is turning slowly, not really moving sideways. You can see what we are doing here now, a little bit more of a pause. So after a strong trending market, the market is here pausing a little bit. And now let's see and wait. We want to see, obviously what you're going to do now is nothing. At this point, you can ask yourself, what are you willing to do? Are you willing to go short? Probably not, because the market has already moved quite a bit and it is typically not recommended to short into an ongoing impulsive wave that has already been moving quite a bit. Are you going to go long? Probably also not really, because this will be against the trend direction. So you really have no other option than to wait it out. And at this point, the only thing that really makes sense in this context is to look for a short right around here probably, or on a continuation. So let's see, actually, is the market pulling back or what are we going to do here? Let's fast forward a few candles. And you can see here, the market spiked back into the previous support. And it seems to be turning into resistance. We could also use our Fibonacci just to see, do we get a confluence? We put our Fibonacci from A to B. In this case, the Fibonacci is not helping, but that's okay. We have a nice confirmation here. Previous support may be turning into resistance. The moving average is also now starting to point lower, which is great, because that's what we want to see, some confirmation of the moving average. Maybe in the future, as the trend is progressing, the moving average can also be used to time your trades, because sometimes when the trend continues, we will see retests of the moving average. Not only retests of previous swing highs and lows, but also the moving average can often be used. So let's actually see what the market is doing. We can also, by the way, here draw some type of trend line probably. So we have a short-term price action pattern. And the cool thing about TradingView is we could even now go to a lower time frame if you would like to do that. So we are in the backtesting mode, obviously. So we could look at, okay, how does it look on the lower time frame? We can see we have some interesting price action development here as well. You could draw your levels here, your trend lines as well, if you want to go to a lower time frame and even more pinpoint your charts or your trades. So let's see. We're going to fast forward. You can see it seems like we are establishing here a little bit of a short-term level. So when we zoom in, you can see that even within this small structure, now we have a previous resistance, which may be turning into support. And then you could use that as well. So we have this bigger microstructure of the big support and resistance levels. And within this microstructure, we have here this smaller scale pattern that we could also use for our trading. So we can really nicely scale it down. And you can see the market has some problems, is coming back into the previous resistance. This is a trap pattern, which is very, very important. It's a significant signal that many traders use as a trading strategy. I've made some videos in the past about it, and now you can see we go to a lower time frame. This is how it looked. Here we have this beautiful trap pattern. Basically what the market is doing is penetrating the previous highs here, if I can get it straight, and then immediately is being rejected. And you can also see that the trend line that we previously drew here is now broken as well. The market is here below the lows. So on the lower time frame, we can already see that the market is also pushing obviously into this bigger trend direction. And you can see on the lower time frames, we would have had this beautiful break and retest pattern that I was referring to on the micro level. So very, very nice confluence here as well. And now we can keep drawing our levels. So now we have really a continuation, support, resistance, support, resistance, support, and for now it's holding. So let's see what we actually have. And you can see the market is attempting a breakout, not succeeding yet, but now it seems like it's doing that. So let's fast forward a bit, and you can see the market is on its way down. Let's get rid of this. It's not really helpful because this was the micro level for the lower time frame structures, and you can see now the market may be attempting to do another pattern like that. And again, what I mentioned in the beginning, when we just look at the difference between the impulsive and the corrective waves, you can see impulsive, impulsive, impulsive. And you can see the arrows are really vertically going down quite a bit. In a short period of time, the market is moving a lot. Whereas when we look at the corrective waves, in a much longer period, nothing happens. So it's really important that we are not getting involved in those periods, because this is where you would have to hold a trade for a long time and not really much is happening. It's also quite volatile and not really a nice trading environment to be in. Whereas the corrective waves, you are potentially getting into a trade, it moves quite a bit in a short matter of time, and then you're out. So your holding time is also reduced. And you can see what is happening here. The market is pulling back into the level and continuing downwards. And you can see now we are having a new potential level that we can draw, and you can see what is happening. The market is coming back now into this level once again. So if you are interested in becoming a trend trader, it really can pay off as well to look for those traps. Not always will those traps work, but they are a very, very interesting pattern in general to specialize in. And you can see this level now is obviously not as important anymore, so we can take it off and shift our support level now to this area. So we have really nicely seen that this is a strong resistance level now, 1, 2, 3 times. We can also see that the market has given us here a level in here, probably for the lower time frames. If you want to follow a top-down approach, you can see this is really a long corrective wave now. The market is pushing through, and this is just such an important feature that once you see the market is actually flushing and pushing through such a previous support level into the trend direction, this is often, not always, nothing works 100%, but this is often where the balance really tips over. The buying pressure and the selling pressure is really shifting to one side, and you can see that the market is often flushing into the trend direction. So at this point previously, there was there was an equilibrium, we can say that, between the bulls and the bears, the buyers and the sellers. And there was a battle going on here, lots of position building back and forth. But once the buyers withdraw and once the sellers take over and push the market into the new trend direction, then usually you will often see that you have those big pushes. And that is why it's so interesting to look into trading approaches that favor and that look for those opportunities. Because what does it mean? It means that if you can find such moves in a short period of time, the market may move quite a bit in your favor. And that is something that many traders obviously want to see and want to trade, because it means you don't have to hold your trades for that long and the profit potential is much higher. And you can see the market is struggling here now a little bit with the previous lows. So let's see, can the market actually break above it? And seems like not. The support level is holding once again as resistance, and the market is going down. And here we can now draw our next support level. So we have this nicely defined level again. The market is struggling a little bit, trading up and below it. It could be that we are seeing now a lower bounce around here. And I made a few videos about the lower bounce, or some traders refer to it as a breakout buildup. So before the market is breaking out, often you will see on successful breakouts that before the market is really sticking to the level. We have seen that actually previously here. This is the breakout buildup. So the market moved into the level here, tried to pull away, and whereas previously the market was able to pull away quite a bit, here the market really stuck to the level. After this green pin bar, the market only rallied a little bit higher and immediately was forced to the downside. And here, this is an engulfing candle, so a strong bearish signal. So you can pick up those little micro clues. We don't only have the big macro picture like support and resistance, the trend direction, trend waves, but when we zoom in a little bit, we have those micro clues that I've shown you previously. We had the micro trend line structure, we had here some break and retests, we have the breakout buildup. So it's really interesting to follow the price action, not only on the bigger picture, but also the lower picture. And you can see the market is struggling around the level here a little bit. Not everything goes smoothly, and then eventually the market seems to be pulling into the trend direction. So very, very interesting scenario here overall. Let's just fast forward this a little bit and see what would have happened afterwards, and we can learn a little bit more. So you can see the market seems to be pushing lower and lower and lower. And again, as long as the moving average here is above the current price action, we are technically in a long-term downtrend. Keep in mind, this is the higher time frame moving average from the 4 hour, whereas we are on the 1 hour. So this is a great way how to bring the higher time frame trend information into your lower time frame. And you can see when we just follow the price action that this is a common pattern. The market in this case seems to be really nicely following this rhythm back and forth, up supports turning into resistance, small correction phases followed by strong breakouts. So this is a very, very interesting price action study and a great way of how we can start to understand technical analysis, trend structures much, much better. So let's do another example, step-by-step price action, trend analysis, and how to find nice price action scenarios. So again, we are technically here more or less in a sideways market. In a sideways market, the characteristic is here really that the price action is not caring at all about the moving average, and the moving average falls into the middle. And again, we are on the 1 hour and we are pulling in the 2 hour time frame, 50 period EMA. Very interesting and good way to add a higher time frame price analysis to your level. What can we see? Not too much. We may be here trading in such a channel here, and we want to make sure that the price action is breaking out and showing some signs of trend information. So it seems like we have a little bit of a level here. We have obviously our last support level here. In general, when you are in a trend in a range market, you typically don't want to trade the first breakout. You don't want to trade the first breakout out of such a trend line or level, but what you would like to do is wait for the first trending period to establish, because then you know you're out of the range and you have some trend structure information, because at this point it could just as well be that the market is just going to fall back into the range and continue its way up, and then we don't want to be involved at all. So typically what I would recommend, wait for the first breakout to be over, and then we have a little bit more confirmation on our side. So it seems like we have a little bit here now going forward, not really enough yet, so let's just fast forward a little bit. Seems like the market is not respecting this level, but it seems like we are putting in here this support level. So it seems like the market may be doing something like break and retest of the level, and this could be now our new support level, which we could then use on the way down, for example, or as a retest play. So let's actually see, can we get a trend established, or will the market just fall back in the range and then we can't do anything? So let's fast forward a bit, and we have our strong breakout, which is rejected. And another great tip while we're at it, I mentioned it a few times in other videos, I would always recommend to wait for a confirmed and complete breakout out of a range. Many traders try to get into such range into such trends with limit orders. So they will put their limit order just below a recent swing low, for example, and then automatically be in those trades. But you will see, and you've probably seen this many times if you're one of those traders, is that there's going to be a lot of fake outs and a lot of volatility around those breakout levels. And then you are too early in the market, the price is back in the range, and at this point you really don't want to be into a short trade because now the market is back in the range and pretty much anything could happen. So great tip, wait for a confirmed complete breakout with a complete candlestick close outside of your range, and then you may improve your trend trading and breakout trading quite a bit. And you can see the market is making an attempt, but again, it's still very, very volatile. And the traders who were in previously are now in a very bad position. So we generally don't want to do that. And we always want to wait for the market to fully break out. So maybe something like that. So let's see, what are we looking at? This could be our new support level then on the way down. And it looks like the market is making a run. Great. So now we know that the market is really starting a new trending phase, right? So we have been trading for a long time now below the moving average. We have had our first trend structure confirmation. So we have here this first beginning move. And now we have a lot more information that, okay, now it doesn't look like a strong range anymore so much. It looks like the market has really broken out of all of this and is on the way on a new downtrend. So now what we can do and what we want to do is we want to look for trend continuations. And typically what we like to do is wait for previous support, turn into resistance. As I've said a few times, we don't want to be involved in corrective waves. That's not what we want to do. We want to find impulsive waves. That is what we want to do. So let's see if this support level can turn into resistance. Another tip that I have seen over the years, and how do you draw your support and resistance levels? In this case, it's not as obvious because obviously we have a resistance or a support level here. We have some points here and here. And what you can do then is, instead of just trying to nail it down with just a single level, which is hard and not super accurate, what you could do is start drawing a zone from the low point. So here we have the lowest level actually, and the highest point, let's assume it's here. And then we just extend it forward, and now we have kind of a zone. And since we are not blindly trading when the market is just touching the level, we want to see some confirmation around it. That works totally fine, because now what we want to do is when the market comes back to the level or into the zone here rather, we want to look for some type of confirmation that the market is actually turning around. So we can look for engulfing candles, for example. We can look for pin bars that is just showing us some type of reaction away from the zone. And I will try to see if this happens here, and then I can point it out to you. So first, the market seems to be moving lower, and now you can see the market has actually retested here the previous lows. So the market wasn't able to fully move back into the complete zone, it seems like, but it seems like the market is making a run here. And in this example, this wouldn't be enough really for me to go short, because this is not really a strong enough signal here. It's more just a first indication that, okay, something may be happening here. But I need to see that the market is really moving away from it. So now you can see here we actually have the complete breakout level. We have the complete move into a new low. And now you can see that the market actually did held this support, held as resistance. We broke into the new low. If we go to a lower time frame, for example, we can nicely see and follow this price action structure here even better. So if you're interested in a higher lower time frame approach, this also works quite nicely. And then you can see the market really fell through afterwards, it seems like. At this point, it's very hard to find, okay, what are we going to do now? Because we don't have a real support and resistance level anymore, because the market just fell like a stone. And we don't have any support levels that we could use. So in this case, we would just have to wait out. When is the market putting in the next support level? And here you can see there was maybe something like that, but on this time frame, it's hard to tell because there are just two touch points. If you're on the lower time frame, you may have been able to use that. So here you can see there was something like a triangle continuation on the lower time frames. You may have been able to find that. So maybe a tip would be to go on the lower time frames if you see that the market on the higher time frames is just falling like a stone and not really providing you with anything worthwhile. You can see here now we have our nice trend continuation structure. On the 50-minute, that is previous support, is now turning into resistance. It seems like this level is really holding nicely here. So we could use that then on the 50-minute, for example, as our confirmation and as our tools. And you can see the market is coming back, performing a little bit of a dirty retest, coming very deep into the structure. And that is why I said we don't want to trade blindly such levels. We really want to see that the market is showing us some signs of momentum away. So we could, for example, wait for the market to break into a new low. For example, here when the market breaks through it. In this case, we don't really have a pattern that could help us otherwise to get into a trade earlier. And you can see now, okay, maybe now this is changing. Now we could, for example, use that level, for example, and see if this breaks and go into an opportunity. And again, fake out, not a complete breakout out of the level. Very important here. The market is trading sideways and sideways, and now it's breaking out of the first level, breaking out of the second level, and struggling again. So you can see we can very nicely integrate a top-down approach now into our trading as well. We have here this short-term structure as well. And very, very interesting overall price action. On the higher time frame, when we're back on the 1 hour, you can see the market is really now strongly trending lower, still below the moving average. And sometimes, very important, sometimes you won't be able to trade a trend. Not all trends are tradable. And sometimes you will just have to wait out until the market rolls over into a new trending phase. And that could be the case, and this is just completely normal. You cannot catch all trades, you cannot catch all trends. And that is very, very important. If you feel that you don't have a read on a specific market, wait it out, wait out for a complete turnaround, or wait for the market to give you a better structure again. So now you can see the market has progressed a little bit more, and it seems like the market is now giving us a little bit more clues. Now we have a long correction phase where we can better define our swing points. So it seems like the market may be giving us this area here. When we zoom in, you can see, whoops, when we zoom in, you can see we have support here. So we could draw our zone into it. And now we have a much better read, whereas previously the price action on the higher time frame was not as clear. On the lower time frame, it was a little bit better, as we've seen, but now on this time frame, it's much nicer. So again, what would be idea that we wait for the breakout, clear the level, and then come back into the structure here and look for a continuation to the downside. So this would be our support, and we would wait for this to turn into resistance if that happens. So let's see and follow the price action. The market is back in the range, gives us here this confirmation that the level is holding, maybe making here now a lower bounce. So let's see if that is the case. Okay, struggling again, but seems like a lower bounce is brewing here. The market really sticking to this zone and attempting to break out, but it's stuck here at this support level first. Now we are breaking out, looks good. You can see the market is now flushing through it. And this is here where the breakout traders get in on the actual confirmed breakout. So that is how you define those trading opportunities. And if you are looking for a pullback, that could also be now an option. And you can see the breakout, whoops, is really nicely following through. So again, patience is the name of the game as traders. Sometimes you will miss parts of the trend. That's totally fine. Just wait it out until you see an edge again, until the market is providing you with good technicals. And then this is how you could go about it. So now the market is moving sideways again, trading below the moving average and not giving you too much information. We cannot really get in a good level. We have some support levels, but they're not really aligning too nice. You can see, okay, what is happening now? No idea actually. The market is closer, coming to the moving average. So that's interesting. So after this breakout, there wasn't another opportunity here again. So let's see what is actually happening now. Okay, let's try to reset our chart and let's see what is happening now. So the market is breaking the moving average the first time since this downtrend started. We have here this pattern. We have here the last swing high around here. And if the market breaks above the moving average, now we are then shifting towards a buying oriented market. And then we are only looking for long plays. So let's see, and the market is retesting the previous lows, and it's immediately coming back above the moving average. So that's a strong signal actually. So let's see, is the market able to break into the high and now start the uptrend? Because now we have a break and retest pattern, right? So that is a strong signal. And you can see struggling a little bit with the level, breaking back, retesting the moving average once again, seems like. Retesting the previous highs, stuck between the moving average and the previous high level. And it seems like now when we draw the level nicely, we are really breaking out into the highs, retesting the level and breaking above it. So now I would be only looking for buying opportunities into the new trend direction. So for example, now we actually have resistance turning into potential support. So now everything turns around into the opposite direction. So now you can see what is happening, and the market is nicely behaving here, and you can see that previous support turning into resistance, breaking higher. The bullish moves happen much quicker. Now the bullish moves are actually our trend continuation and the impulsive trend waves. And now it seems like, let's clear this up one more time and just draw in our levels. So we have our one zone here, we have one zone here, we have our moving average now below the below the price, and let's see what we have. Okay, looks interesting. We have another level here. Now we can really nicely put our price into the boxes and a continuation breakout. So breakouts to the upside work much nicer here now on the way up, whereas previously when we've seen the breakouts to the downside work much nicer. So impulsive waves are now the bullish waves, as I said previously. And then you can see that the trend is unfolding very nicely. Previous resistance is now turning into support. Very nice structures here. You can see here's our next support level. Here the market is currently challenging the previous support, resistance now as support. Let's see, is it holding? Yeah, the market is coming back, but retesting it here. Oh, and it's making a run for the moving average, which is interesting. And the moving average is holding. So now we have really a deep pullback. But as long as the moving average is holding, I would still be much more interested in buying scenarios. So what you could also be doing now is go to a lower time frame and look for patterns here. What do we have actually here? Not too much actually. We have just some support and resistance plays, so we don't gain more information. So what you could be doing is just generally trade breakouts or wait for continuation plays. You can see here we have a short-term support resistance. So what you could do is, if you want to get in early, wait for the breakout here or wait for the breakout here at the top, and that could be then your place. You can see the moving average is being retested. Actually is retesting here the structure. So very deep correction wave, and now the market is pushing higher, breaking above the previous high, which I highlighted, and making its way up. And you can see that the bullish trend phase is continued on the way up. As long as the moving average is holding, I wouldn't be too concerned. Those deep pullbacks happen sometimes, and they can be great trading opportunities as well. If you see that the market is coming back to a moving average and it's actually holding, then there are even better trading opportunities, because if you want to buy something, the best price to buy something is at the lowest possible, and the lowest possible is at the moving average, as long as the market is staying above the moving average. And you can see now the market is following through on the upside, retesting previous highs as support. A little bit more messy than what we have seen on the downside. That happens as well. Not all the trades are your textbook trends. So you can see break and retest, structures hold, impulsive waves, breakouts, and so forth and so forth. So it's same old, always, or not always, but very often you will find this rhythm in the market. Break and retest, structures, impulsive corrective waves, breakouts on the way up, breakouts on the way down. As long as the moving average on your higher time frame is holding, you are more or less good to go. And then this is how you can use that information for your trend trading, breakouts, pullbacks, whatever it is. But it's very important that you are aware of this rhythm. It's aware of the difference between impulsive and corrective waves, and also that you have an approach in place that helps you define uptrends and downtrends. That will help in your trading a lot. Hope you enjoyed the video. If you did, leave a thumbs up, leave a comment, and don't forget to subscribe as well. Happy trading.